Good evening, everybody. All right. Kind of a soggy evening in Pittsburgh, Pennsylvania tonight. Kind of cold and dreary. Had kind of a exhausting trip to Seattle this weekend. First of all, it's a long flight trip out there. And then Sandy has two grandsons. They're slightly autistic, 5 and 7, and they can wear you out by 9 in the morning, and then you have to go the rest of the day. But I was telling the chat room today that I did learn where pirates go to cool off. They go to the Arctic Ocean. So, anyways, the market conditions are pretty much telling us that it's not really trying to go anywhere. Now, it did consolidate when we started to see the indecisive trading here. Let's make this bigger. Here at the in the Dow, which we anticipated there'd be a pullback, maybe at least to the T line, which it went right through on Friday. But notice where it went to today, right smack dab to the 50-day moving average before doing a bullish harami. So the uptrend should still be in progress, provided tomorrow morning we see the pre-market futures open positive. If it opens lower, not any real expectation of a major sell-off, but just kind of sloppy sideways, which is making it difficult to hold on to a lot of positions, especially when they're starting to close back below the T line, on the long side anyways. Now the NASDAQ also traded off and did kind of a doji type day, or a spinning top, which makes tomorrow's trading relatively simple. They open up positive and start taking it positive. Obviously, they're going to start confirming the bullish harami in the Dow, and the spinning top in the NASDAQ, as well as the spinning top in the S&P, are going to be confirming. The S&P came back up and closed above the T line. And then the transportation index also traded indecisively today, doing a doji smack dab on the 20-day moving average, which is right in the very center of this sideways trading. So once again, if the pre-market futures are lower, they're going to take the markets back down. If they open higher, this slow rounding bottom, which basically is telling us is a slow rounding bottom, is still in progress. So doesn't give us too much direction. But as we can see, there hasn't been really any major direction that you could really sink your teeth into here for quite a while. We're just moving sideways in this market with up, down. Makes it difficult. Last week I told people that if they're having trouble making money, please email me with their phone numbers and I'd get on the phone with them. But I would not be too discouraged, because this is a market that it's tough to make money in. So the prospect, or not prospect, but the strategy at this point is try to still be in positions, long and short, where at least you can make some money, so that if this does break out to the upside or to the downside, you've got still assets available to flip out of one side and participate in the next market move. But as we can see right now, the market move is telling us that it's not in any great direction. We're smack dab in the middle of the trading range with another doji. Some of the other indicators, the crude oil prices came right back down to the 50-day moving average. Looks like it did. Now, this is not a harami. This is called a homing pigeon, which is the same thing as a harami, except the second candle is a dark candle. It is usually a signal that's telling you the selling has stopped, but you need definite confirmation that the bulls are stepping in at this area. That's crude oil. Gold is having a hard time getting back up through the 200. We're still in this downtrending channel. Nothing that I get real excited about. Gold can be a buy if they open up positive and take it through the 200, because that means if they do a doji sandwich or a double doji sandwich, they could take it right up to the 50-day moving average in one day. Silver, same scenario. It's having a hard time getting up through this downtrending channel. If they open this lower, they're going to the bottom of the trend or the channel. And what else do we got out here? Nothing too much in the grains. Soybeans can be bought because that's got a little J-hook pattern bouncing off the 20, and as we can see down here, this is why the Japanese rice traders say, let the market tell you what the market is doing. Well, this market, soybean market, is telling us that the 20-day moving average has been a significant factor. So that tells me if they're still trading this one positive, there's that doji sandwich setup, that more than likely they're going to the top of this trend channel. I bought some cattle today with the idea that if you had an inverted hammer, a kind of spinning top, gap up, breaking this downward trend channel, they should come back up. Where's that thing? Let's see, let's just get away from that. Back up to this level and or back up to this level. So staying long in cattle right now. What else do we have? Oh, cocoa. Cocoa is one that you can get ready to go short if it breaks this level right here. If it breaks this level, as you can see, that's been kind of a support level. Stochastic's still heading down. If they break it, there's a good possibility. There's some gaps that they want to be filling. One right down here at the 200-day moving average. And other than that, let's see. The dollar. Dollar's still heading down. As long as this can't get back up above the T-line, you want to stay short the dollar. The euro, as long as it can't get back below the T-line, you want to stay long the euro. And the Japanese yen. The Japanese yen, you just want to stay out. That's about as sideways as you can get. Wheat is a slow uptrend. You can be buying this one based on if it does a doji sandwich here, they should be breaking out to the upside. Did it again, didn't I? So you could be buying this one on positive trading. You just don't want to see it close back below today's open and close. But this is after hour trading starting. And corn. Corn, slow, steady uptrend. Not anything wildly exciting, but as you can see, the uptrend remains in progress as long as it stays above the T-line. Let's see, palladium. That's not palladium. I should be able to figure this out. That's platinum. Let's see. PD. No. I don't ever trade palladium and nickel. They're a little bit too thin. I'm not even sure I know even the symbol for nickel. I don't. So that's obviously evidence that I don't trade them. Okay. Before I forget, tomorrow night we've got Ralph Acapora coming on. And Ralph and I have been good friends for probably, well, I talked to him when I was still a trainee at Kidder Peabody back in the early or the mid-70s. But he's always been well respected and just been I guess, an advocate of technical trading. He's probably the single most influence on Wall Street to have technical trading departments in a lot of the brokerage firms. Most major brokerage firms poo-poo technical trading. But with his influence and efforts, he got quite a few of the major brokerage firms to establish technical analysis in their research. very well respected and very good friend of mine. And I know every time we have somebody coming on that some of them have constant sales spiels through the way all the way through. Some like we need to do as courtesy is let them at least show some of their product at the end. Ralph's coming on with absolutely no sales agenda whatsoever. He's just going to give his ideas on technical analysis and how to kind of simulate that into the Dow theory. It will be recorded. We were going to do a webinar on Wednesday, I think it was, on moving averages, but we've had more requests on doing the math on spreads, but we will do, we're just going to push the moving averages probably out until next week. Okay, and so the reason we're having people like Ralph come on, I'm going to try to get Bob Prechter to come on so that we can start getting maybe some longer term views of sectors and the market indexes, because we do have the long-term picks area set up. We're just having technical difficulty. It's going to be set up to where you can be a member of the long-term picks area if you can't sit here and trade all day or want to see faster stuff. But also, if you're a member of the Candlestick Forum, you're automatically a member of the long-term picks area. Yes, Peter. He's a very sound, intelligent analyst, and he's kind of got the same motivation. He's not so interested in selling product as he is teaching people how to trade options effectively. What did I just say? Trade. I was reading and talking at the same time. He's trying to teach people how to trade long term effectively. Could you have predicted sideways profile in the last 7 days? As far as on the Dow, no. We knew that there was going to be a pullback. As you remember, last week I said, get ready for some profit taking. Anything that starts trading below the T-line, close out the positions. If they stay above the T-line, you stay long. If they start trading back below the T-line, it's going to pull back. We don't know whether the pullback's down to here or whether it's to here. But why take that risk? Also, because of the pullback, that takes some of the energy out of some of these stocks. For example, Moby was a good long, provided it stayed above the T-line. But notice what happened. It did a left-right combo last week and closed below the T-line. If you held on to it, other than closing it when it came back below the T-line, why is that in there? The next day had to open positive and trade positive to stay in it. The fact that it closed below the T-line and traded below the T-line told us this did not work. Remember our simple analysis? If this was the candle that told us the bulls were taking control, it should be in an uptrend. If the bears can close it more than halfway down the candle that told us the bulls were in control, the bears are back in control. Get out of the trade. What's the worst case scenario? It turns around and you can always buy it back. But when they close it back below the T-line, remember the probabilities are extremely high that you're going to be in a downtrend. So what's this whole setup look like? M&M, somebody help M&M get found.
Price crossed below simple moving average.
This whole pattern looks like a bearish J-hook, number one. Number two looks like a blue ice failure, which means where's our next target? Down here at the 200-day moving average. I say that, or I repeat that, because that is why we want to know what our signals and our patterns and our different price moves are going to tell us, that we can pretty well predict, because of the bearish left-right combo, a failure at the 50, evidence of a bearish J-hook pattern, that we at least know what our high probabilities are for the next target. Francisco, that's our problem. We don't have the link out because they're still working on um, the connection so that members can get in free. But if you want to just have long-term picks, that's a separate membership. So they're still working on that. Hopefully within the next 2 days, at least the members can start getting into the long-term picks area, which right now long-term picks right now only consists, so we're not putting out a whole lot until we can get it up and running. But our long-term picks is whiting oil, and more than likely we will be adding J.C. Penney on the list. And the rationale or the analysis of that is we've had this downtrend. Now we've broken through this downtrend, long-term downtrend, and they started the uptrend off a little double bottom, gap up. Now notice what they're not doing. They're not trading back below the 50. If they break through this level, that means they're heading higher, probably up to this level, which means even over the next 2-3 months, they could take this, which is my definition of long-term or longer. If they take it from 875 to 13, you've got a good 60%. Yes, money. The long-term picks are going to be available, so that's why we're talking about these right now. Is even though we can't get into the description of everything, at least you know right now our long-term picks is WLL Whiting, and we've got probably 10 pages of information on Whiting, why Whiting is good, and then hopefully the next long-term is anywhere from 2 months or greater, something that's that you're not going to have to sit and follow every day. That the criteria for staying long may be using the 50-day moving average versus the T-line. Yeah, Ford has been a long-term pick for quite a while. I'll have to probably just write it up. Mainly coming off this double bottom J-hook pattern, setting up for another J-hook pattern. This one I'll have to do more write-up on. So if you're long Ford long-term, stay long on Ford long-term. Okay. Will you be exploiting your trading program for long-term positions? Yes. Anytime that we do a long-term pick, it'll show you the charts on the criteria that we use, which is the daily, the weekly, and the monthly, and going back for quite a while, why that long-term pick was picked out, which isn't going to be that difficult. Once you know the 2, 3, 4 reasons why a long-term pick, there's 2 things that we're trying to do. Number one, show people where the long-term pick is probably a good probability trade, number one. Number two, once we do find that good probability trade setup, provide everybody with information on what the prospects are for that company out in the future. Now, for example, J.C. Penney. J.C. Penney hasn't been able to hit its butt with either hand here for a couple years. But either J.C. Penney was going out of business or they were revamping, and so right now apparently their revamping is doing them good. And so this is the type of thing where when everybody was down on J.C. Penney, there was a strong buy signal. That might be the time to start looking into why everybody's starting to buy it again. That means management or their policies have changed. So that we can't tell what's going on with a company, obviously, just by the chart. But we can tell by the chart that something new has happened. Then we go and research what that was doing. The 200-day moving average, yes, may be resistance, but we're not concerned about that. We're not trading it. We're looking looking at this for long term. Okay, let me start flipping over. So J.C. Penney was on the first one I was going to pick out anyways. And then we've got RCII Rent-A-Car. This one looks good because of the kicker signal. Probably tells us where they're coming up here to the 200-day moving average. Some of the REITs, and we're going to be putting a few REITs for people that want to put something in their long-term accounts. What is that? Put something in their long-term accounts, not only for growth, but also for good dividend yield. Things like this, where we can identify the pattern in a REIT, such as the scoop pattern and the breakout, which means this is probably now back up to this range, or will continue at that point. So if something like Northstar has a good dividend yield, you know you're going to have some appreciation plus a dividend yield that you might want to stick in a retirement account someplace. Yeah, okay, just answer that. Way ahead of you. Now, Apple is something, whoops, I hate when I do this. Apple is what's telling us that they aren't bailing out of this market just yet. When you've got the big boys acting very strong, remember, it doesn't mean Apple by itself is strong. What it means is, if everybody knows that Apple's still moving up, what's their overall thought process? Oh, there's still other opportunities in this market, so I'm not selling this market right now. So that's when you see something like Apple acting strong, that pretty much tells you that the rest of the market is not falling out of bed. Google did a hammer doji right on the 200-day moving average. Now, where do you think most institutions, if they're ready to buy Google in here or in here, where do you think they're actually going to buy if they see it supporting on the 200-day moving average? So I'd start watching this to see if it's going to be a buy. I'm going to take a look at a few of the biggies right now. Netflix is still in a downtrend until you see that reversal. Now, the possibility of a reversal is that we did a gap down, spinning top, hammer type signal right about the same level it bottomed out before. Then if they open this positive, then we can pretty much predict there's a double bottom in place. Let's see, Amazon was getting whacked today. This one, all you can do is stay short until you see a buy signal. Now, the buy signal may have been that you hit the bottom of this trend channel, but you had a kicker signal to get there. That would still imply to me that there's still more downside. Anytime you see a kicker signal, that's a pretty good indication that there's a lot of force to get out of that stock. Still like ITMN, because notice what it's done at the 50. They can't get it back below the 50, even though they keep coming down and testing it. This one you want to keep an eye on because you're going to have that wedge formation. If they come up through this wedge again, that's going to be a slingshot effect coming off the 50. This one you want to keep an eye on, and notice where it actually bottomed. With a big morning star signal with a long-legged doji. Stochastic still heading up. Wouldn't be afraid to be buying this one. Let's see. I doubt it. On Apple, their dividend date, I wouldn't think that is their dividend big enough to even make people. I think people are buying Apple because of the prospects of its future. AFOP, which we recommended a while back, has one criteria that keeps you holding. It can't close below the T line. Just stay with it. Oh, the split, that's it. All right, they've got a split coming up. ICA. Uh-oh. That's not IC. No. That's not ICA. This one's got a nice little breakout with a kicker type signal. This one you can be buying on positive trading because what would it be telling you? After the kicker signal, they weren't resisting at the 50, and if they weren't resisting at the 50, they weren't resisting at this level, you could get some good pop out of this one. Soda was thrown around in the options trading room this morning, as well as the main room. Here's another one that's telling you exactly what it's not doing. It's not closing below the T line. More than likely, the 200-day moving average is your next target. Bed Bath & Beyond, no, Best Buy. Best Buy also did a little gap up. Notice how flat and indecisive this trading area is. The stochastics in the oversold area. We know that our probable target is at least back up here to the $28 range. And then we can see what it does from there. If it breaks through, there's your next target up at the 200. Some of the trucking companies, GOL. Whoops. That's GOL. You stay long on this J-hook pattern. Notice how this J-hook pattern started with a kicker signal that took you up. You had a flutter kicker. You had your J-hook pattern that stopped on the Morningstar signal. They couldn't really close it below the T-line. You stay long on this one, YRCW, same scenario. They haven't been able to close this one back below the T-line. Now you've got a little scoop that saw buy signals right on the 200-day moving average, and you've closed right at the 50, which makes this very simple. If they open this positive tomorrow, the 50 is not acting as resistance, and more than likely this area is not going to be acting as resistance. You could get some good price movement to it. What did I just do? Okay, and RJR, another Morningstar signal right at the end of a flat trading area. Let's see, what were we discussing? I am in the process of putting kind of candlestick trading rules or observations together. When you see a Morningstar signal at the end of a flat trading area, that's usually that indication they've changed their mind and there's going to be a slingshot effect, just like a little scoop pattern. Number one. Number two, if you see a candlestick signal that closed right on the a resistance level, if it opens positive, everybody else that's watching this resistance level can see it's not acting as a resistance. We just know that if it opens positive, we can be buying early. We don't have to wait for the confirmation. It's usually going to have follow through. John, the old rationale is that all gaps are eventually filled. It might not be filled this week, this month, this year. All we're worried about is what the trend is doing from that point. Once you see a sell signal, oops, I lost my train of thought. Once you see a sell signal, then the prospect of coming back to fill that gap is much more likely. What was the example on BWP? Oh, getting into the gap area. Yeah, you want to stay long, even though it had kind of a dismal day. They still use the, let me make this big enough. They still use the 50-day move or the T-line as support, and they're right here in this gap out area. This one you stay long until you see a sell signal and a close back below the T-line. Said Bed Bath and I goofed up. Then we have BBRY. Oh, Shaw. It looks like it's done some bottoming action here, but this one could easily pop back up to the 200-day moving average, which would give you a good 12-15% return. SDR, there's your fry pan bottom, there's your J-hook pattern. Bounce off the 50. If they've bounced off the 50, first target is probably filling this gap, which would be a good 15% move. Second target is the 200-day moving average, which would give you a good 30-35% upside. This one we will probably see recommended on the recommended list tomorrow. Now, I didn't get an opportunity to put picks out on Thursday night because I was traveling, but I just had an inkling that there was probably not going to be a day to be buying anything. Not that I thought the market was going to pull back 140 points, but I just thought there'd probably be some consolidation. Now we just have to wait for the market to give us an idea of which way it wants to go from here. So we do have some that look good for the long, and still some good shorts. NBWO, not anything exciting except for the fact that it did an inverted hammer type signal today, which means if it opens positive tomorrow, you want to be buying. If they can break through this level, they've got some good running room. And AXAS. What was the ticker? S/CA. I don't know, Marsha. I may have been mistyping something. AXAS looks like it's setting up for another J-hook pattern. Wouldn't be afraid to be buying this one on positive trading tomorrow. And Rundy. This one did a little inverted hammer. You can see the slow curve. Makes this very simple. If this opens positive tomorrow, coming out of the fry pan bottom, knowing that it's supported as a 50, your next target is likely the 200-day moving average. And SPLS, Staples, did a doji, gap up through the 50, off the T-line crunch. This is a good indication that they're going to fill this gap and then possibly come up here to the, get rid of the cat to improve your trading, yes. Coming up here to the 200-day moving average. Oh, was it? That could have been it. SDR. Yeah, SDR. Too late to buy Staples? No, definitely not. That is the signal. There's your signal right there, which was the doji sandwich type signal that broke through the 50 as well as this level right here. Wouldn't be afraid to be buying this one on positive trading tomorrow. All right. On the short side, what we're kind of looking for are chart setups that look like this, where you can see it rolling over and then starting to break down. And I think another one was NQ, where they did a doji, came right back. And so this one can be shorted on weakness, because that pretty much tells us this downtrending channel is still in progress. So if this opened lower tomorrow, you want to be shorting this one. TRXL is another example of a chart that was rolling over. Now, I didn't put up enough examples today, but notice what this one did today. This one was a hefty move to the downside. There was a lot of stocks that were rolling over that had big down days today. And why is that? It's because investor sentiment was starting to get a little bit soggy with this market pullback. Here's another one, for example. Notice all the dojis right here at the T-line, the left-right combo, bearish confirmation. They opened it right on the T-line and then just slammed it. This is where investor sentiment, especially coming down through these levels, tell you this is where everybody's going to start bailing out. These are the type of things that you want to have mentally in your head. That slow curve with sell signals coming out this side
in past 10 bars on 65
to get ready to go short. I remember GoGo was opening a lot further down. Notice how it did a left-right combo at the 200, which told us this downtrending channel was still in progress. I think GoGo was trading down here somewhere after hours. So this is, again, comes back to observe the obvious. When you can see there's a trend channel and you can see there's sell signals and they're coming back through moving averages, that tells you the uptrend is still not confirmed. The downtrend is still in progress. Downtrending channel is the same as an uptrending channel. As long as it stays in the channel and you're seeing buy signals at the bottom. I think we've got Tezar. I'll pull Tezar up right now. Way down at the bottom of the list. But Tezar, notice where it failed. Right here, smack dab at the 50 with a doji, hanging man, left-right combo, gap through the T-line. Where do you think the next target is? Right here at the 200-day moving average. Let's see. Oh, I skipped over. MNI, another scenario where After rolling over, they are just pulling the plug on some of these. EDU, whoops, S.EDU, rolled over, gap down. This one you want to get ready to go short if they open this week or tomorrow, because notice that it failed this support level area. More than likely it could be coming down. Let's see, it probably is on this support area. If this opens lower though, with a gap down, they're taking this down further. Let's see. That's right. Let's see, ADEP. Now, some of these you're seeing that look good a few days ago, but that's why we want to be able to recognize the different patterns. There's a rollover. There's your likely target. That one can be shorted on weakness. And ORMP was a buy a few days ago, but the fact that they closed it back below the T line not only tells us that this is something you want to be out of, but they came right back to the 200. If they open this lower, the 200 is not acting as as support. Your next area of support is down here in the $6 range, or about an 80% move to the downside. CUDA, there's that bearish belt hold. They took it up above the T line and came back below the T line. Where did they take it up to? The top of this trend channel, and started selling this off. This one can still be shorted on any weakness tomorrow. The volume, I think, was a little bit light on this one, but if you can short it, you want to be able to go ahead and short this one. And BIDU, same scenario. Notice where it failed, right smack dab at the 50. This is why we always say watch what it does once it gets to the next resistance level, because that's going to be the information that we can see immediately which way they're planning to take it. In this case, that to me tells me that we could be going down to the bottom of this trend channel, which means they could take it down into the $130 area. And Moby was one that we were long not too long ago, but it failed with a close back below the T line. Oh, we already did this. That's why it looks so familiar. Kendai, another one that looked good not too long ago. A few days ago, as a matter of fact. But it closed back below the T line. It was time to be out. Remember, anytime they start closing below the T line, the probabilities are pretty strong that you're still heading down. Where's the target? More than likely down to the 200-day moving average. We did Kendai, NOV. Kicker signal to the downside. I would suspect they're going to bring this all the way back down here to the support level. That one you can probably be looking at the puts. CMG is another one that had a big bearish belt hold. Bearish belt hold, bearish engulfing. You're in a downtrend until you see a buy signal. Would it be safe play to close a long position once it closes below the T line? Definitely. You can always buy it back, but the probabilities start going against you when they start closing below the T line. For nothing more than the T line's been producing a statistical probability setup that if it closes below the T line, things are heading down. If they close above the T line, things are heading up. So if you see a candlestick sell signal and a close below the T line, get ready to go short. You can pretty much see where their next target might be. That one was SSNI. VISN, another one that had good charts a few days ago, but then failed right here at the 50. Doji Sandwich makes this very simple. If this opens lower tomorrow, where do you think it's heading to? It's heading back down here to the 200-day moving average. If it opens lower, we've got a potential of a bearish Doji Sandwich, which means this area is not acting as support anymore. They'll be selling until they find the next support level. PEIX. We made some good money with this one on the way up. But now it looks like it's doing kind of a double head and shoulders. If this opens lower, there's a gap to fill down here. That's a 40% move to the downside. And then possibly supporting all the way down here at the 200-day moving average, which would be about 100% downside. UNXL, observe the obvious. The obvious is they can't get back up above the T-line, and now they're starting to sell off pretty hard. This is usually where the panic selling comes in, and you can make some very quick profits on shorting at these levels. This is, remember, where do most people sell? They panic sell at the bottom. Every time they brought it up to the T-line, there was that big dark cloud that closed back below the T-line. Let's see. TSEM. There's the slow curve failure, and where did it fail? Failed below the T-line and didn't support at the 50. Good possibility they could take that down another 35%. And we were doing our LinkedIn. LinkedIn is another one. We observe the obvious. The obvious is we're in a downtrend. Notice the left-right combo, gap down. You stay short on this one probably until you see the stochastics get to the oversold area, which means somewhere down here, some places where the panic selling can stop. And CCIH, okay. Yeah, I don't know how to get rid of the email pop-up alert. Oh, I can drag it out of there? I didn't know that. If I can catch it next time, I will drag it quickly. It's tough waiting to close when it's started trading below. Oh, close my email. That's an idea. CCIH, another failure right here at the T-line. More than likely, observe the obvious. It's coming down to the 200-day moving average. Angie's List had a big sell signal. That big bearish belt hold, failure at the 50. You stay short on this until you see a buy signal. And where did this downtrend start? Right up here at the abandoned baby, gap down. And ever since then, they had one day where they could close it back up above the T-line, but they couldn't confirm it the next day. This is where you would have covered short positions, and this is where you would reestablish the short. Just kind of observing. Anytime you see a sell signal and you're in a downtrend, obviously means there's no change of investor sentiment. The downtrend is going to remain in progress. Move, same type of signal. Dark cloud right at the 50. Gap down, left-right combo. They're probably going to bring this at least back down here to the bottom of the trend channel. And QIHU, this one, you want to go short on any weakness tomorrow. There's your slow curve. There's your breach of the, oh, that's because I closed it. Well, shuzzbutts, this is just a fun. Now what happened? Something closed. This one's very simple. If this opens lower, it's not supporting at this level. It's telling us that the 200 is not acting as support. More than likely, they could be coming down to the bottom of this trend channel, taking it down pretty hard. And I think the last one was WWE. There's that slow curve. Obviously, the 200 is the next target. So, okay, that's about all I got for tonight. Tomorrow will be very telling based upon how they open this market. If they open it positive, that pretty much tells us that there's just kind of a little pullback in the Dow, but the uptrend is still in progress. If they open it negative and start taking it back down, kind of giving us the illusion that there's a head and shoulders, that there's going to be some more weakness. So the Russell 2000, let me see if I can. That's pretty much what the NASDAQ looks like. It has to stay above the 200 and definitely needs to get back up above the T-line. So it has to open positive tomorrow. Okay, any questions on candlesticks? UNXL. No, you don't have to be concerned that it's oversold. You have to be concerned, but where do most people sell? They panic sell at the bottom. So this would probably be a quick trade, meaning you're expecting some big down days and then a reversal. Left-right combo basically tells you after a day of indecision, they've told you what the decision was. I'm trying to think of which ones they were. TSEM, Newt, QIHU, and I forget which one. Tazar, was that it? Well, yeah, there was kind of your left-right combo, bearish engulfing signal. A doji, bearish engulfing signal, which also is a hanging man, and then confirmation. The left-right combo is one of your strong reversal signals. It tells you after that day of indecision, they've made up their decision exuberantly. Now, there's kind of a left-right combo right here, the doji, bearish engulfing. And then you have a doji sandwich. Makes a high probability that they're taking this one down to the 200-day moving average. A doji sandwich is when you have a strong bullish or bearish day, in this case a bearish day, then a doji type day, then they open it. Remember the simple rule of a doji, they're going to move it in the after a doji. It means if they open it lower, the magnitude of this candle right here is usually the same magnitude as this candle right here, which means there's high probability there's going to be more downside. Very simple, but they're usually going to move in the direction of how they open it after a doji. And in this case, if you can see there was a strong sell signal, a doji, this is going to continue the downtrend, basically the same as that, which means if you can anticipate that if it opens lower, it's going lower, you can also anticipate what type of pattern it's setting up. In this case, a bearish J-hook pattern, which your next target, what's the aftermath of a doji sandwich? Usually more downside or upside, depending which way. You have to be in the overbought or oversold? Not necessarily. Remember, the signal, and with all the evidence right here, where you had failure at the 50, a close below the T-line, a failure of the bullish signal, and you're in a downtrend, and you can see that there's a bearish J-hook pattern. That's all evidence that this is going down. And then, as you can see, your stochastics aren't showing strength. They're also rolling over. A blue ice failure is this exactly this one where it falls through the ice, which in this case was the 50-day moving average. They came back up to see whether they could find the hole they fell through, which they couldn't. They failed, which we could see in the sell signals, which means they drowned. They're going to the bottom of the pond. Let's see. Difference between profit taking and reversal. Profit taking usually is a pullback based upon the lack of a sell signal. We had sell signals here, but it wasn't quite confirming because we weren't in the overbought condition. That told me there was a prospect that this was not a reversal. This was just a pullback. And today we kind of saw evidence of that. Whereas a reversal, like a doji bearish engulfing signal with stochastics in the overbought condition and a close below the T line, with the stochastics in the right place, that was more of a reversal than not having all your your stars in alignment. Let's see. ORMP, aren't you interested in seeing whether, well, yes, but that's what we said. First of all, you should have been out of this position. If you went short, it was based on that it was probably coming back to the 200-day moving average, which it did. Now, your next criteria is, will it support at the 200-day moving average? We can tell that based upon what type of signal they do here. If they do a little bullish Harami, that tells me they're supporting. If they open this lower, that tells me that it failed and they're probably going to the bottom of this channel. Diamond offshore, just profit taking. There's no sell signal and your stochastics aren't in the overbought condition. A belt hold, which one was the belt hold? Angie's List, I think. Belt hold is when they gap it way out of the trading range and then they bring it back into the trading range. That's in the Japanese rice traders definition. That's where the two sumo wrestlers are fighting. One's trying to back out of the ring. The other one grabs his belt and pulls him back in, and they go back to fighting into the ring. Okay, just trying to get tells a doji plus a gap up equal buy. Yes, especially if you're in the oversold area. FTEX is an example of a stock that fell through the T line but appears support at the 21-day. So sell signal was close below the T line, but the next day today opened at the T line. Was that a sell or a hold? That was still a sell because notice all the other criteria. You failed at the 50. You had a doji, a shooting star, a dark cloud, a hanging man, and then another failure at the 50. I mean, they told you in this downtrend, they were failing at the 50, and they closed back below the T line. You should have been out of this position. What do you need to see at this point to be back in this position? You need to see bullish confirmation, and you probably want to see it get through the 50. So your probabilities are much better to see a buy signal. If I had owned this, yes, I'd be out of this position with the close back below the T line. If I was ready to buy this, I wouldn't necessarily buy it on a positive trading day tomorrow, but if I was going to buy it, I want to see a positive trading day and a close above the 50 because obviously the 50 has been acting as a resistance level. So worst case scenario, you close it out and you have to buy it back. You may have been out 48 cents, but you probably weren't buying this to make 48 cents. To buy this, probably looking more for something where you could make $1.50 or $2 on the trade. Remember, every trade that you make, in this case, if you were buying down here on the breakout, where was your first target? The 50-day moving average. Showed us it failed there. You back out of the trade. Now, that ends that trade. Your next trade is, if this does bullish signal and closes back up above the 50, you can always buy back. That becomes a new trade. Okay, let's see. All right, Jim, let's go ahead and do the double line. And let's do the second double line. All right. Okay, hopefully that will keep the scrolling from. Tweeter, stay short. Got that bearish J-hook pattern in progress. DDD. DDD, this one is a very simple one. You can see that you're in a downtrend. You can see you failed at the 20 and you closed back below the T line and you have a doji. Very simple. If this opens lower tomorrow, you want to be going short. Because where is it likely moving back to or down to? Back to the lower end of the trend channel, which brings you down into the $40 area. Plug, ever since it closed below the T line, which was the day that we bought it, was the day we had to come back out because it should have broken out and it told us it wasn't. This one you should have been out of on this day, if at worst on this day. You could always buy it back on the next buy signal, but there hasn't been a buy signal and a close above the T line. Kendai, you want to be out of this one because it closed back below the T line on this day. If you held on to it, it had to open positive and trade positive. The fact that it opened lower and closed down here meant they were rolling it over. They're still heading for the 200-day moving average. And GGAL, this was one that you stayed in until the end of the day. This one should have been closed out at the end of the day because they had a sell signal on Friday. They had the potential of negating it today, but they came back and closed below the T line. This one should have been closed out. You can always buy it back on positive traded. Herbalife, this one, if you're long, you stay long. Obviously, it has to get up through the 50-day moving average to stay in it. Dr. Pepper, stay long as this stays above the T line. Somebody went through all of those a couple of days ago. Coca-Cola is still strong, and Pepsi, stay long as this stays above the T line. SDRL, S.SDRL. This one, again, once it got to the 50, you have to be more diligent because you've got a trend channel and the 50 acting as resistance. If you own this, just very simply, if it opens lower tomorrow, you close out the position. Worst case scenario is they open it, take it down, and then bring it back up above this, above the 50, you can always buy it back. But the probability, say, if they open it lower, they're coming back to the T line and then see if it does a little support off of that and comes back up through. But why sit there and wait for maybe 2 or 3 or 4 days with your money when the probability, say, if they open it lower, the T line was acting, or the 50 was acting as resistance. AGNS, this one you stay long as it stays above the T line. Nally, you stay long as it stays above the T line. Valero, same scenario, just stay long. NG, this one you should have been closed out today because what was it telling you? That this downtrending channel was still in progress. It needed to open higher and trade higher, especially get up through the 50. So you close it out because right now it's just telling you it's a downward trend channel. See, we did Apple, Tesla. Tesla got hit. This one is also telling us we're in a downtrending channel until you see a buy signal and a close back up above the T line. This was a case where if it opened positive and traded positive, you were in it. But as soon as it closed back below this level, especially with a bearish Harami telling you the buying had stopped, this one could have kept you in. But this day here on Friday told you definitely to be out of the trade. It was not going in the direction that you wanted it to. Scotty, stay short until you see a buy signal. It started, but the same scenario. When it closed back below the T line, it was time to be out. Now we're sitting right here on the support level. Stochastics, even though they're only in the halfway point, are turning back down. If this opens lower, they're coming back down to the bottom of the trend channel. WFC, Wells Fargo. This one you should have been out of today. You can always buy this one back on positive trading, but right now the probabilities with the stochastics just climbing to the overbought area and closing below the T line tells you more than likely, at best, it's going to move sideways until the 50 catches up. LNG, another one that you should have been out of Friday. You had your hanging man, closed below the T line. When they close below the T line, even if they came back positive, what's it telling you about your trajectory? It tells you it slowed it down quite a bit, but it might not be a good buy to be in this one now until they break through this level up here. And that's the case with quite a few of them. See, DuPont, oops, is that even though they may not have a real strong sell signal, they've lost their trajectory for being, or for the reason of being in there. DuPont has now moved sideways right until the T-line's caught up. You got to be careful of this one for two reasons, because of the lack of magnitude of move, number one. Can't think of what the second reason is. Number two, you don't have any buy signal in here right now. I would be trading something else. SWKS, you stay long, but at this point, you can see there's support right here at whatever this level was on the low of the day. I would use that as a stop. It shouldn't come back in that direction. MasterCard, milk. MasterCard, nothing here that would get me excited about being long. More apt to go short on any weakness on this one. CA, there's your bearish belt hold right at the top of the trend channel, gap down through the T-line. This one you stay short with the prospect of it coming back down at least to the bottom of the trend channel. And CRM, stay short until you see a buy signal. Buy signal might not be there yet because you're not even in the oversold area. They still have some more downside. AGEN had a kicker signal today. This one you can be buying on positive trading tomorrow, especially if it can get through the 200-day moving average. WHX, this one's got a nice slow curve. If the volume is good, you can be buying this one. This has a good prospect of, first of all, filling this gap, which means that would start the slow curve breakout, which would make your 50-day moving average your next target. FSL is a short. Yes. Anytime you see that kicker signal, notice what the kicker signal did. It not only told you they were out in a force, but they broke this support level, and they broke through the 50. More than likely, they're coming down to fill this gap and or coming all the way down to the 200-day moving average. And SPR, another doji sandwich potential or a Morningstar signal potential. So this one is going to move in the direction of how they open it tomorrow. Palladium. That's position Palladium shares. Maybe it's PL. That's platinum. We did PD, right? Palladium. PA. Palladium. All right. Palladium. Kind of just hovering in here. A very slow uptrend. And NI. No. NIN. Oh, the nickel ETA. All right, that might be reversing now if it opens below the T-line tomorrow. I'll try to find those, the actual commodity signals. NXPI has gotten whacked here for the last few days. Whoops. It was getting whacked. But notice where it closed today, right on the 50. However, notice the trajectory. What could have been a nice breakout situation lost its steam. Now it's moving sideways. This one doesn't become of interest until it breaks out through this level up here. And LMT, Lockheed Martin, is just moving sideways. Two things going against it. There's no trend, number one, and the magnitude of move, percentage-wise, is very small. I'd be trading something else. TRV, Travelers, just stay long. Notice the big fry pan bottom breakout. You stay long until you see a sell signal. Now, It's gapped up in the overbought condition. However, it did it on a kind of kicker signal, which tells me there's probably going to be more upside. FEYE was getting hit today. This is another one where you stay short until you see a buy signal and a close above the T line. And PZG, wouldn't be buying this one. You can't short it. Wouldn't be buying it until you see a close back up above the T line. And Jern, another one that you don't want to be buying until you see this one needed on the buy signal, needed to see bullish confirmation, which you didn't get. Yoku, stay short. It's probably still a pretty good short. Con stayed above the T line today, just barely. You stay long as it stays above the T line. But Maxwell was closed out because it did close below the T line. So it needed to open positive and trade positive to keep this rounding bottom trajectory. Even if it comes back up over the next day or two, the trajectory is still telling us it's not going to get exciting until it breaks out to do the top. It's just still in a slow up move. It didn't break out this last time. GTAT, this one you stay short now, or you can go short on weakness tomorrow. As you can see, the downtrend remained in progress. Right now, it didn't even support at the 50. I'd be ready to short this on any weakness, anticipating that your next target is right down here, along the bottoms here, and then possibly a scare down to the 200-day moving average. TPLM was doing well, except it's gotten whacked here the last few days. This one should have been closed out today. If it didn't get closed out, you can see where you had the shooting stars. They were going to bring it back at least to the T-line, which they've done, which means to stay long in this one, it has to open positive tomorrow and trade positive. Atlanta Power, just stay long. Don't want to see it close below the T-line, though, after today's hanging man type signal. DDD, yes, you want to short this on any weakness tomorrow, which tells you the downtrending channel remains in progress. CLAC, you don't want to be long or short this one right now. It's probably supporting at the 200, but it's not doing anything that shows you there's any recovery. I'd take my money elsewhere. SanDisk. SanDisk, all you can do here is stay long. Now, if this opens lower tomorrow, that means they're bringing it back to the T-line. You close out the position and just wait for the next buy signal. SSRI, another one where you can be going short. If it opens weaker tomorrow, you're still in this downtrending channel. GGAL has to open positive and trade positive to stay in it. It probably should have been closed out today, but if you stayed in it, it has to open positive and go positive. If it opens lower, you've got the potential of a doji sandwich, which means the 200 or the 50 becomes your next potential target. Facebook, stay short. This is going to the 200. We did the Russell. This one has to open positive and get back up above the T-line, just like the NASDAQ. Post, this one is got a blue ice failure in progress, which means the 200 is your next likely target. UGAZ. This one, if it opens positive, it'll be breaking out of this downtrending channel. But it has to, that's your long natural gas. With the gap up, if it opens positive tomorrow, you got a potential of a flutter kicker signal to the upside. Whoops. Nothing that would get me excited about this chart at all right now. If this opened lower, I'd close out the position. I would only buy it at this point if it came back up through this level at the top. And PCYC, nothing here yet. You need to see confirmation that you have a bullish Harami, but you need confirmation to break up through the T-line. Okay, I guess we got most of them. A few more. GTI. S.GTI. This one is going to move in the direction of how they open it, so it better open positive tomorrow to stay in it. GWPH. This one needs to see buying. If this closes back below the T-line you want to get out, it means the steam has run out of it. SQNM, same scenario. This one has to open positive to stay in it tomorrow. If it opens lower, steam is gone. NXPI has to open positive to stay in it if you're still in it. This one should have been closed out today with it closing a second time below the T-line. Let's see, we did Twitter. Bank of America. Stay short with the gap down. And if I shorted it tomorrow, I'd use today's open as my stop. Verizon. I wouldn't be long or short this one, even if it moves from here back up to here. That's about a 4% move, and you're in a sideways mode. You can be buying, but you've got a lot of junk to get through, and it may take you a long time to get up 4%. I'd be trading something else. And let's see. QWIK. SQWIK. Oops, that one's not working. Lack of magnitude of a move is that even though it might move in your direction, there's not enough return to it to make it worthwhile. AKS, this one you can be shorting on the bearish J-hook type pattern if it opens weaker tomorrow, with the potential, first of all, of supporting here. Then next down here is the 200-day moving average. Bill, I think the moving averages that we use are all calculated based upon the close. And Adobe. Adobe looks like it's heading back down toward the 200-day moving average. AFOP, we did. AFOP, you stay long as this one stays above the T-line. Main, this one you can be going short. Obvious downtrending channel. Obvious failure right here after 3 dojis and a close back below the T-line. First target right now could be this downtrending bottom channel. And Gale. Gale, you can stay long as it stays above the T-line. Jacks, this one you can be buying on positive trading tomorrow. J-hook pattern in progress. Cores. Oh, what happened there? Well. Cores, you can short this on weakness with the prospect of heading down to the bottom of the trend channel, which would also correlate with moving back down to the 200 and also correlate with filling this gap right here. Las Vegas Sands, stay short. That's going to the 200. EXXI, probably wouldn't be long or short this one right now, unless it comes back up through today's high. That would tell me this J-hook type pattern was in progress. If it lollygagged in here, it would tell me I'm still stuck in this sideways mode. And I wouldn't buy it until it does break out to the upside. Whoops, Quicksilver. This one you can be buying on the J-hook type pattern. Notice where it opened yesterday or Friday, right smack dab on the 50-day moving average. Junk, is that, oh, not getting junk. Okay, let's call it a night. The market does need to open positive to confirm the bullish Rame. Best Buy, you can buy on positive trading tomorrow. TSO, stay long until you see a sell signal. And Priceline. Priceline came right down to where you suspect it might come to, the 200-day moving average. Wouldn't buy it, though, unless you see it close back up above the T-line. All right, with that, everybody have a good evening. We will see you in the chat rooms tomorrow.